If you have student loan debt, you can't buy a house. True or false? Do you know the answer to that question? So there's been a lot of changes and a lot of buzz recently in the mortgage and the real estate industry around the changes in guidelines for FHA loans and student loan debt. So that's what we're going to talk about today. I'm Lynette. I'm the marketing director at Liz Moore & Associates. And today I have Ginny Phillips here with me, and she is a loan officer with Atlantic Bay Mortgage Group. So thank you, Ginny.
Hey.
So before we get started, and thank you, before we get started and talk about what exactly these changes are, can you start by telling us what exactly an FHA loan is?
Yes, so an FHA is a government-backed mortgage type. So typically you have FHA, VA, conventional, USDA. FHA is a phenomenal choice for those who are first-time home buyers who don't have a lot of money to put down. The minimum down payment is 3.5%.
Okay.
30-year fix. There's a 15-year fix. Typically, the interest rate is a little bit below a conventional loan. However, it does have mortgage insurance that's tied to it, that's tied to the loan for the life of the loan, if you put 3.5% down. But it really is a great choice. It's a little more forgiving when it comes to credit scores and debt to income ratios. And a debt to income ratio is all of your monthly payments plus the new housing payment divided by your gross monthly income, which is why the student loan payment is pretty important.
Right, right. Yeah, sure. Definitely.
It does allow you to go over a 50% debt to income ratio or DTI, whereas a conventional loan is pretty conservative. And once you stay, you can't go over 50 and still get an automated approval. So that's why folks who have higher DTIs choose this FHA choice.
Okay, well, that makes sense. Well, then can you tell us, Ginny, what did the guidelines for student loan debt used to be before the changes?
Right. So prior to the changes, regardless of whether or not the loan's in deferment or they're making payments, you have to count 1% of the balance as the payment in that debt to income ratio, unless the payment that's reflected on the credit report is actually higher than the 1%. Okay. So, if you had to finance your entire college career, I mean, that's right, a fairly significant payment. So it really did knock a lot of people out of being able to purchase a home.
Gotcha. So what did they change? What are the new guidelines?
So the new guideline is, instead of counting 1%, we only have to now count 0.5%. Okay. So it's more in line with Freddie Mac, which is a conventional loan option. Right. They have 0.5% as well. So now FHA is 0.5%.
That's huge. That's huge. So then what does that mean for borrowers who have, a little bit or maybe even significant student loan debt? What does that mean then for them and their ability to buy a house?
So the reason it's important is because, unlike when you're shopping for a vehicle and you're approved for a vehicle loan and then you just go buy it, when you're pre-approved for a mortgage, you're not pre-approved for a purchase price or even a loan amount. You're really pre-approved for payments. And the things that go into that payment are the principal, interest, taxes, insurance, flood insurance, HOA. And the reason that payment is important is because that's a big piece of that debt to income ratio, which is one of the main components of pre-approving someone, right? We look at credit score, we look at how much money you have in the bank, and we look at the DTI, the debt to income ratio. So if your student loan payment was $1,100, that's a fairly significant increase to that DTI. So it's either going to throw you out of the ability to buy at all, or now that we're counting less, now you can afford more, right? Because now we're counting half the debt. And, it's really interesting because it's a 30-year fixed mortgage. So you wouldn't think that $100 difference in payment for that student loan would make that much of a difference, but it does. But it really does. In fact, if you take the difference and you divide it by 5, that kind of tells you the increase in purchasing power that you have now and being able to buy.
Right. That's huge. And so I'm sure these changes, I know they're recent, but have you been seeing a lot of positive impact here? A lot of people who couldn't buy it now can? Yeah, that's awesome. Very good.
It's positive information that we needed in the mortgage industry.
Yes.
So crazy lately. So this is actually good news. It's now in line with conventional financing, which is great, which is exactly where it should be.
Right. That's awesome. Well, so if you find yourself with student loan debt, whether it's a small amount, or I know a lot of people have a large amount of student loan debt, you can buy a house. You heard it from Ginny. It's Great news with these changes. If you maybe thought that this was something that you couldn't do, or if years ago you tried and couldn't because of your student loan debt, you might want to rethink that and give it a go again, because these recent changes sound like they're going to benefit a lot of home buyers. So if you
One
want,
other thing too, Lynette, I wanted to say that even if you have been pre-approved, but you're not able to find what you want within the price range that you were pre-approved for, now is the time to call your mortgage lender and say, since these student loan changes have been made, can I increase my price point? Can you take another look and see if maybe I can go a little bit higher? Because it's really, it's gonna have a huge impact. We're talking tens of thousands of dollars in purchasing.
Wow. That is huge. That is really huge. So Jenny, tell everyone how they can get in touch with you, because if you've not been pre-approved, or if this is something you want to explore, Jenny is who you need to talk to. So give us your contact information.
We would love to help. So Jenny Phillips, you can reach me at my email address, jennyphillips@atlanticbay.com. My name is spelled G-I-N-N-Y. It's actually short for Virginia. You can reach me on my cell, 757-572-9635. We would love to help you.
Yes, absolutely. If you're forgetting any of those and you want to send us an email, info@lizmore.com is the basic email that goes to me. I can get you to Jenny if you forget her information, although just rewind the video, right? This is video, rewind the video. Send us a direct message, drop your information in the comments. We will get you to Jenny one way or another, and explore if student loan debt now can no longer hold you back from buying a house. So awesome. Thank you, Jenny. This is great. Thank you.
You rock. Alrighty. Bye.